Hello and welcome to everyone. I hope you have managed to reach the next event in the schedule. You know, if you are still appearing in the previous event, we won't be seeing your questions. So please make sure that you are now under the keynote by Atomize. So welcome to Atomize. We have Tim and Marco here. They will be talking about tokenizing the physical world. We already had an exciting conversation this morning about tokenizing everything. So we are continuing now. I'm now going to give the word to Marco. Welcome on stage, Marco, and enjoy the keynote.
Thank you very much. Let me see if everybody sees the presentation.
Perfect, Marco.
Perfect. So welcome, everybody. First of all, thank you to the organizer to having us here. A brief introduction. It's Marco Grossi, CEO of Atomize, speaking to you, and Tim Harvey, advisor of Global Paladium Fund. And today the topic is tokenizing the physical world, as you see in the entry. We also then have, again, us two today here together presenting because of a very simple reason: to make tokenization and commodity happening. You need the old world and the new world. I'm representing the new world as Atomize, and Tim representing the old world, but also with a glimpse of new world, which is the Global Paladium Fund, who enters the new world as well. Let me start by saying commodities and tokenization. What a success story. To get there, it's very difficult. We have to solve complex matter that needs to be addressed, solved, and implemented, especially around the supply chain management of the commodity business, where you have different businesses, different contracts that are governed along different countries. So if you think about jurisdictions, a very difficult cross-border here as a key word, but also different big organization that needs to be convinced that distributed ledger technology is the future. And also within a market that is constantly moving, demand and supply change dynamically changes every week, every month. And within such an environment, the new technology might certainly be a game changer for us. So both Tim and I see this as a game changer for the commodity business, the distributed ledger technology. Additional topics that needs to be solved in order to get there, beside the cross-border issues, beside the different size of the organizations, there are plenitude of tax, legal, and regulatory matters, which are not kind of easy to solve, but rather difficult. Once done, then we have a kind of open highway to then execute our innovations. But to get there, that's a long journey. What we also can see is that if this journey is achieved, that this might revolutionize the supply chain management and creates new way how to transact amongst the commodity business along the supply chain and also on the investment side. If we then add ESG components into a transactional view of the hyperledger fabric of distributed ledger technology, then we can also improve by adding whatever sort of information to a transaction, and certainly ESG component might then enhance the future view of this economy, of this business. I'm Marco Grossi, I already said, CEO of Atomize in Switzerland. Atomize is a company sitting in Zug in Switzerland, based or kind of digitizing and tokenizing the physical world in two areas. One is the supply chain management, including everything related to ESG topics, and on the investment side of the commodity business, where we have different products that can be brought in a future case into the market. Also, if whenever possible, link that to ESG components. We use, as you can see here, Hyperledger Fabric as our surrounding technology, which is tweaked exactly to the needs of this business. So there is a proprietary platform that we have created in order to support the whole business supply chain. And today with me, I have Tim Harvey, as I already anticipated, that is coming from the old world, and I could convince him a couple of years ago to join us in that journey and to bring his expertise into play and connect the old world and the new world. But let's have Tim also introduce himself to you. So, hello, Tim. Words to you.
Thank you very much indeed. And thank you to the organizer of this wonderful event. And it's great to be here today with all of you. My name's Tim Harvey. I'm advisor and head of business development for the Global Paladium Fund. The Global Paladium Fund is also based in Switzerland. And we basically enable our users, be they investors or commercial users, to access the metals markets. The metals markets are actually quite complicated and hard to access. You have to be a member of an association. You need to be a bank. You need to have warehousing. You need to have all of these things to be able to access the spot markets. What we mean by spot market is the market which actually reflects the physical price of the metal in your hand today. So if you look at things like the oil market, they talk about the spot market, but actually it's physically impossible for you to invest into oil unless you've got your own super tanker offshore Europe, where you can deliver the metal at any one given, the oil at any one given moment. But when it comes to metals, it is far easier because metals are very easy to store. However, it doesn't matter that they're easier to store than oil, it's still quite complicated. And this is why GPF is really interested in the blockchain and tokenization and how we can use tokenization and blockchain to make the lives of our investors and our commercial users so much easier. And I'll be talking a little bit more about that over the next few minutes, but in the meantime, let me hand back to Marco.
Thank you, Tim. So, as I said a couple of minutes before, we have two areas where we concentrate our business. One is the supply chain management. The other is the investment side of commodity market business, both connected to ESG. But if we go one step deeper now in the supply chain management, so what is the real game changer here with DLT technology? So what we can achieve is that we can create a so-called single truth of information along the supply chain, where we can attach track and trace information, proof of provenance, additional ESG components, quality assurance, audit report into a transaction. So we have built our platform transactional based. So a transaction means delivery versus payment. And every transaction, delivery versus payment, will have an invoice, will have a bill, and attached to that transaction on the blockchain, we can store whatever kind of information are deemed to be stored in that transaction. That permits us to have a single truth of information, which is, in addition to have it kind of a single truth of information, you can also have it mutable. So it means the data stored on that distributed ledger piece of technology, it can't be changed. In other words, it's also some kind of security over that DLT. And it reduces also certain kind of disintermediation. It means we reduce kind of middlemen who needs to be involved here to make this happen. At the end of our presentation, we have an example where we show the old and the new world, how the disintermediation might be visible, explained to you. But this is very important because that bring data and documentation authenticity to a next level. So it brings us not only on reconciliation, streamlining of processes, but also kind of the data itself and the contract into a uniqueness. So back in time, sometimes you have the last contract which is signed on one end but not signed on the other. With us, I think you have the single truth of information where you always can check what is the latest information, what is the latest contract. With this also reduce paperwork and interaction on daily operations. In other words, if you need to look at what is governing, who is owner of that piece of information, which at the end is linked to a real world asset, you can look into that DLT technology piece, and you see it's either with the prior deliverer or it's with you, and you have all the information attached there. So it means that you also have back office and middle office interaction, which is a benefit to your business that reduce certain costs, which is also beneficial for daily operations and gives somehow a certain flexibility on operation optionality in making decision of when a metal piece is part of a supply chain and when it can be used for investment purposes. That's also an idea that we brought forward within our platform, that we can switch from industrial, that's the supply chain management, into investment area, where you have the metal for investment purposes. So you can have kind of a switch on and switch off of this state. And because it's a kind of connected into a big marketplace, it allows then additional participants to be part of it. So you can add a bank if a bank is needed. You can add a warehouse provider if such is needed. And you can add any sort of client and investors depending on the needs of the issuer. So that's somehow what our platform brings as with it. In a nutshell, we can put some benefits over that piece of technology, and it's not only the technology that is the benefit, but also what it comes along. So the technology drives a little bit the reshapement of the processes. It reshapes the supply chain. It reshapes how people act between each other. So the technology is not per se the winning argument, but it creates new ways how to transact, as I already said at the beginning. So just summarizing, it gives you certain access to institutional storage, where the one platform can record that in a distributed ledger technology piece, which is in our case the Hyperledger fabric. So you can prove that you have metal in a so-called storage sitting somewhere in Switzerland, as an example. And so it gives you then access not only to the storage, but also to the prices attached to that storage, which is institutional grade prices and metals. You can have a certain liquidity increase. We are not aiming to be in a kind of exchange like LME. We are not aiming to be in the spot market. We are somehow in between, an alternative way how you can manage your commodity business, and where you can combine industrial and investment participants and create a certain liquidity amongst certain parties who are interested to follow that route. This also leads us to an efficiency increase as a utilization in one platform, disintermediation I already said, but also reduce certain counterparty and operational risk. Why? Because we create a so-called pre-funding environment where when you transact with another party, that transaction already is secured by money sitting in a bank account. So in other words, the delivery versus payment on our platform happens with a pre-funded bank transaction. Means that the counterparty and the billing per se is near real time, which allows us to switch from metals to metals within certain not milliseconds, but kind of within minutes. What sometimes in the old world is kind of lagging behind because of T+1, T+2 transaction time. And the last one is it creates certain transparencies. And as I already said, ESG data can be attached to any kind of transaction, but also it gives kind of the information and the documentation another level of transparency, which is kind of also very important if we look into auditability, review, and reconciliation matters. That's in a nutshell the industrial supply chain side of our business. And I would like to hand over to Tim to explain us the investment side of our business that also has a certain kind of innovation benefits and also a view into the future.
Thanks, Marco. On the investment side, we're getting some questions coming in as well. What we'll try and do is build the answers into the answers we give as well. But what we've created, or what we're looking to create with GPF, is the ability to trade and Marco made reference to this already, to trade the institutional spot price. So if you're looking at something on copper or nickel, for example, then we would use the LME spot price to actually reflect the value of the token or the physical metal that you're holding digitally. That's really important because if you're accessing the LME spot price, you actually need a license from the LME. You need to be using LME good delivery metal. You need to be storing with the ability to move off warrant to on warrant within an LME warehouse. So you're actually already part of the infrastructure of the global institutional marketplace for nickel or copper. The same goes for precious metals, be it the LBMA, the London Bullion Market Association, which basically is the global standard for gold and silver around the world, or the LPPM, which stands for the London Platinum Palladium Market. And the LPPM is obviously for platinum group metals, exactly what gold and silver are for the LBMA. So basically, from a pricing point of view, we take the institutional global spot price. So if it's a base metal, copper or nickel, potentially cobalt or something like that, we're looking at the LME, the London Metal Exchange price. Why is tokenization so important to the physical world? Well, if you look at the LME, for example, the LME takes its roots back to 1571 and the coffee shops of London, where you used to draw a circle on the floor of one of the coffee shops, and anybody standing within that circle wanted to trade copper. It was formalized in 1877 with the creation of the LME, the London Metal Exchange, and effectively it was potentially, maybe it was the first step in globalization. It was saying that if you want to access our market, you must make sure that the copper you're delivering is to this standard. And the fact that if you're a supplier to the LME, you've been pre-approved to deliver the metal, we know who you are, et cetera, et cetera. And maybe this is, you know, some of the lessons that we can take with tokenization of making sure, as Marco said, with Hyperledger Fabric, that you know who your counterparties are. So when it comes to the tokenization of commodities, particularly from an investment point of view, knowing your counterparties is incredibly important. Other reasons for doing tokenization of metal is proof of geographical location. We live in a world now where investors and commercial users of metal are very concerned as to carbon footprint, to make sure there's no slavery issues, no child labor issues, etc. We can use the blockchain to actually confirm to investors and to users that the metal they're using has no child labor, no slavery issues, or the carbon footprint of the metal. So being conflict-free, or as we say on this slide, carbon neutral. This helps investors drive the transition to a net zero carbon economy, because if I want to invest into copper, for example, copper being very, very important to the generating of net zero carbon power. If you want to have a wind turbine, you can't have it without copper, because that is the very essence of how you generate electricity. You can't have hydropower without copper, because it works on exactly the same principle as wind power. You can't store this power effectively without nickel, for example. Cobalt is also a key component in battery technology. So all of these metals people are interested in because of the drive to a net zero carbon economy. So cobalt has obviously, if anybody who's been reading the news knows, there's been conflict issues with cobalt, and being able to prove the geographical location of your cobalt obviously means you are outside of a conflict zone and things like that, which means anybody can happily and freely use your metal without concerns that something's going to come back and bite them in the future. So that's very much from the investor's point of view, because investors by their very nature probably have investors sitting behind them, and some of them may be in our audience. If you invest into a pension fund or something like that, then you've seen the dramatic growth in the opportunities you have to invest into ESG structured products, environmental, social and governance products. 10 years ago, this really wasn't an issue. But it just shows you how quickly the world changes, because now this is the major issue. And this is something that all investors are concerned about. But let me pause there and hand back to Marco. Marco.
Yeah, thank you, Tim. I think to summarize what we said, and also your example, we have put together an old and a vision view of this exact example that you proposed, the exchange traded commodity business. Where you have here on the left side how it's structured in the old world, where you see different participants, somehow connected, somehow disconnected. So you have different systems that interact with each other. You have different reconciliation of businesses. Sometimes paper still works. Sometimes even fax still is needed, just to open and close a bracket. So a fax transaction today, sometimes you even need to find the provider who still provides you faxes. But in certain occasions, this is the reality on the left side. And what our vision is on the right side is to kind of have a distributed ledger, to have a secure, mutable environment where we can concentrate the single truth of information, means all the contacts, all the needed documentation and reconciliation within one place, distributed to make it secure. And where you have still the client, still the commodity provider, still the token issuer, these parties still are needed there. But if you wish, then you can attach additional participants, so you can have a bank attached to it. But the essence is that hyperledger fabric and the blockchain or DLT, distributed ledger technology, gives you the opportunity to attach a lot of information within one transaction. Maybe I also ask now Tim to give us kind of 3 major topics that he would see in the new vision of the new world that helps in regards of the investment side of things, especially in this business here, which is the exchange traded commodity business, that makes the vision real.
Thanks, Marco. I think, and to answer another question which we've had, you know, this overlaps the old world and the new world. And whether you're selling an investment structure onto a stock exchange or if you're selling a token, the actual proof of ownership is pretty much exactly the same. How we create the metal token that for an investor or for a commercial user is we take the data which is available. By that, I mean, if you're looking at a bar of gold or silver or platinum or palladium, every single bar is unique. It has a unique identifier, which is actually put on it by the smelter of the bar. So nothing to do with GPF. It's actually the smelter that actually puts the number on that bar. When the bar lands for the very first time at the LBMA or the LPPM, it is the member bank which is responsible for weighing that bar and for assessing that bar. And then they're putting the weight stamps onto that bar, not the refiner. So that's the kind of the belt and braces of the actual identifiers that go onto bars. When you're looking at things like base metals, it's similar, different, but similar, because there you're looking at things like cathodes. So because of the value of base metals is nowhere near as large as that of precious metals, there's no shortage of checks, but the actual way of recording the data, maybe it isn't stamped into the bar, maybe it's attached by hologram or something like that. So you take that data and you record that data into the blockchain. So let's look at what we then do, as Marco said, these 3 key things. So taking the identifiers, recording those into the blockchain. That now, to use a word Marco's already used, gives the investor or the user an immutable record of ownership, because that cathode, that bar, belongs to that investor, because they can see the actual unique identifiers which have been recorded. If you look at a step 2, I suppose, would be the ESG impact this has on the metal. There's a product available in the market today, only for institutional investors, but it is available, that basically neutralizes the carbon impact of the nickel the investor or the user is actually acquired. This is done by the miner who actually runs this project. They generate carbon certificates internally by reducing their carbon footprint every year. And this project's been running since 2013 and includes one of the big 4 accounting firms, one of Europe's largest environmental consultancies, and also includes the Nickel Institute and the International Association of Platinum and Palladium Miners. So it's a project that's already been running for 8 years, and very, very recently, this year, they issued the first product using all of the data that is being collected. And of course, with the blockchain, I can now take that data and that carbon credit, and I can attach it to that pile of or bundle of nickel. And that's unique, because now I can prove to an investor using blockchain or a commercial user that that metal is carbon neutral. Even if the metal is used by a battery manufacturer to, and that battery is then sold to Volkswagen, Tesla, Hyundai, whoever it is. Because of the record in blockchain, even though the metal no longer exists, you can still prove that the metal that went into that car was carbon neutral. So that's definitely number 2. And I think number 3 is ease of trading, or to be able to exchange ownership. And the fact that you as an owner, you know exactly the quality of the metal you're going to receive and on which date. So I think it is the immutable record. It is the ESG quality, and it is the actual ability to transfer ownership. Because when you transfer ownership of one of the tokens that GPF's been working on, you're not just getting metal. You're getting metal which is the global standard, traded at the global price, and custodied globally as well at institutional custody rates. So this gives you access not just to institutional quality, institutional pricing, it's giving you actually access to institutional storage costs as well. Marco.
Thank you very much. And I think that somehow coming to a kind of a summary in regards of the connection we have in order to make this happen. So we have the biggest companies within this project. You can see some commentary of big names here and what is out in the press. On our landing page, you can also see the banks, the warehouses, and the industry player we are working with. So big names that can make this happen for one, and maybe not the sole reason, but one of the reasons is because they are the first in the supply chain. So the beauty of our project is we are closely connected to the mining companies who are the first in the supply chain, and connecting that with ESG data will guarantee us that throughout the supply chain, everything starts with us. That's why we strongly believe that Atomize can write a success story, and that combining that with the industrial investment side of the commodity business, connected into one marketplace and platform, somehow this reflects our vision. The ESG data connected to it, that is kind of the additional target that we want to have, and makes the whole scenery perfect. That was our keynote speech, and now we can open up for questions. I don't see the questions now on the screen because I'm the presenter, but maybe Tim.
Yeah, I can see a question here from, and Victoria, jump in and tell us to be quiet whenever you want. But
yeah, I think maybe if you want to take one question.
We'll just take this question from Juan David. If the token is based on the metal number bar, what does this mean? Is it not going to be used by, that's the whole point actually, because if you've bought a physically backed product, you have had a direct impact on the supply and demand of the metal. You wouldn't really want a product that does not actually put the metal away. If you've put the metal away, you physically own that product. It's yours. I think it's really important to understand that. If you haven't done that, you've effectively bought a note. And what is backing the note? Is it a bank balance sheet? Whose balance sheet is being used to back the token? So physical storage of your metal, be it as a user or as an investor, is really, really important. And I think, Marco, that's it.
Maybe to add that
Yep.
that we as Atomize have always we are metal custodian and tokenize that information on the product. So in any case, we have always kind of a big four looking into what is the real world there, what is exist, and what is the reflected digital twin of that piece of metal in the blockchain. We have also on our landing page an audit report on our very first transaction, just to complete.
Yeah, Victoria, back to you.
Thank you so much, Tim and Marco. Very interesting keynote. And for the audience, if you want to know more about the project Atomize, please reach out to them either via the people tabs. They have several members there, or if not, in the booth, or if not, through the website. Thank you very much, Tim. Thank you very much, Marco. And now,
Victoria, thank you.
thank you. Now let's continue with the next panel discussion please go to the schedule tab and go into the next panel discussion. Thank you, guys.
Bye-bye.
Bye.